Transport Canada is freezing rebate payments for Tesla under its new program.
Canada putting a hold on Tesla in its EV rebate program. Canada's transport minister says Reuters, they say no rebate payments will be made, at least for the time being.
Canadian transport minister is basically saying they are going to freeze all rebate payments for Tesla. We're talking about $43 million.
Canada has abruptly blocked Tesla from its electric vehicle subsidy program, freezing $43 million in rebates, sparking outrage from Elon Musk and Tesla investors. But this isn't just about Canada. Trump's new tariffs are adding even more pressure on Tesla's North American business model, making production and exports costlier. With tensions rising, is Tesla at risk of losing a key market? Things have not been going well for Tesla lately. On one hand, there are U.S. President Donald Trump's new tariffs, and on the other, Canadian Prime Minister Mark Carney's retaliatory moves targeting Tesla. So how did one of the world's largest electric vehicle manufacturers get caught in the middle of such a diplomatic storm? What were the moves that led to the company's exclusion from Canada's EV incentive programs? And could the Trump administration's new tariffs upset the balance of the North American automotive market? With the world economy looking on, what options does Tesla have? And how will global trade wars affect not just one company, but the industry as a whole? We explore the answers to all these questions, along with the background to the Tesla Canada tensions. Tesla, led by billionaire CEO Elon Musk, has long been at the forefront of the electric vehicle revolution. But its aggressive business tactics frequently bring it into conflict with regulators. Now, a major standoff with the Canadian government has escalated into a multi-million-dollar crisis. At the center of the dispute is Canada's incentives for zero-emission vehicles, IZEV program, which provides taxpayer-funded rebates for EV buyers. Tesla applied for $43.1 million CAD in subsidies, a move that immediately drew scrutiny from officials. The timing was critical. Tesla's request came just as Canada announced that the IZEV budget was close to running out. The company allegedly sold 8,753 vehicles in just 4 dealerships over a single weekend, raising concerns about the legitimacy of these transactions. The Canadian Automobile Dealers Association, CADA, accused Tesla of manipulating the system, calling the sales figures unrealistic. Adding fuel to the fire, Prime Minister Mark Carney condemned Tesla's involvement in the subsidy program, while also attacking Trump's broader economic policies. President Trump announced 25% tariffs against our auto industry, and this is a direct attack. Let me be clear, a direct attack.
President Trump announced 25% tariffs against our auto industry. And this is a direct attack, to be clear, a direct attack.
Carney declared in an emergency cabinet meeting on March 27th. We will take steps to counter this attack on our workers and industries. This crisis isn't just about Tesla. It's part of a growing trade war between Canada and the U.S., where retaliatory measures threaten to disrupt the entire North American auto sector. Tesla's aggressive approach to securing government incentives has been a key factor in its global expansion. But in Canada, it has backfired. The company's strategy involved applying for massive EV rebates at an unprecedented scale, triggering scrutiny from regulators. One of Tesla's most controversial moves was its use of a compliance model, a stripped-down version of the Model 3, created solely to qualify for Canada's incentives for zero-emission vehicles, IZEV program. When the program first launched in 2019, the price cap for eligible vehicles was $45,000 CAD, but Tesla's Model 3 SR Plus was priced at $52,000 CAD, too high to qualify. Tesla's solution? Introduce a bare-bones version of the Model 3 at $44,999 CAD, with a drastically reduced range of just 151 kilometers, far below Tesla's usual standards. This tactic allowed Tesla to unlock millions in subsidies. Over time, the company became the largest recipient of EV incentives in Canada, collecting a staggering $713 million CAD in taxpayer-funded rebates. But critics argue this success was built on exploiting loopholes rather than genuine consumer demand. The Canadian Automobile Dealers Association slammed Tesla's approach, stating, "Tesla has exploited regulatory loopholes to an extent that is unprecedented." With rebate funds running low, the Canadian government finally acted, freezing Tesla's $43 million CAD in pending incentives and launching an investigation. This decision didn't just cut off Tesla's financial pipeline in Canada, It ignited a political firestorm. Now, with Trump's tariffs adding more pressure, the question is, was Tesla's strategy just smart business, or regulatory manipulation that went too far? The Canadian government's crackdown on Tesla didn't happen in isolation. It was a direct response to U.S. President Donald Trump's aggressive trade policies. On March 26th, Trump announced a 25% tariff on all imported vehicles, specifically targeting Canada, Mexico, and the European Union. Within 48 hours, Canada froze Tesla's incentives, a move that effectively removed the company from the country's EV market. This decision was seen as both economic retaliation and a signal to Washington that Canada wouldn't back down. These tensions are creating significant uncertainty for Tesla. If tariffs escalate further, Tesla could face increased production costs, supply chain disruptions, and declining consumer demand in key markets. The company has already lost billions in stock value since the trade war heated up. The key question now, can Tesla adapt to this volatile environment, or will it be forced to rethink its global strategy? Tesla's stock has always been volatile, but the Canadian EV incentive freeze and Trump's new tariffs have sent shockwaves through the market. Investors, already cautious due to Tesla's recent performance struggles, reacted swiftly, leading to a 5.6% drop in Tesla's share price following the announcement. The hit comes at a time when Tesla was already facing challenges in key global markets. In Europe, where Tesla once dominated EV sales, competition from Chinese automakers and local European brands has eroded its market share. Recent data shows a double-digit decline in Tesla's European sales, further weakening investor confidence in the company's long-term growth prospects. Wall Street analysts warn that this crisis isn't just about Canada. With protectionist policies on the rise in multiple regions, including the US, Canada, and the EU, Tesla could soon face even tougher conditions. At a broader level, Tesla's troubles reflect a shifting EV landscape. Once the undisputed leader, the company is now under siege from new policies, rising competition, and fluctuating consumer demand. The question now is, can Tesla navigate these trade wars and reclaim its momentum? Or is this the beginning of a long-term decline? With Tesla facing government backlash in Canada and rising costs from Trump's tariffs, the company is now exploring its legal and strategic options. Can Tesla fight back legally, or will it need to adjust its business model to survive in a more protectionist environment? Legal experts suggest Tesla could file a lawsuit against the Canadian government, arguing that the sudden removal from the ISEV program was unjust and politically motivated. However, Tesla's past actions, such as the alleged manipulation of EV subsidies, could make this a difficult battle. Canadian officials have already justified their decision, with Transport Minister Chrystia Freeland stating, "We have a duty to ensure that taxpayer-funded programs serve the public interest, not corporate loopholes." With Trump's 25% tariff on imported cars, Tesla may have to adjust its supply chain. One option could be shifting more production to its Texas Gigafactory to reduce dependency on international components. However, this comes with challenges. Tesla still relies on battery components from China, which could soon face additional tariffs. A move away from international supply chains could raise production costs, making Tesla less competitive. Elon Musk has close ties to Trump, and some analysts believe Tesla could lobby the U.S. government to carve out exceptions or subsidies that offset these new challenges. However, with Canadian Prime Minister Mark Carney taking a hard stance, Tesla may struggle to regain lost ground in Canada. Tesla's legal and strategic decisions in the coming months could determine its future in North America. If Musk can't reverse the Canadian government's decision, Tesla might have to completely rethink its pricing, incentives, and supply strategy. The next big question: could other countries follow Canada's lead in blocking Tesla's incentives? We dive into that next. The Canadian crackdown on Tesla reflects a broader trend of protectionism in global trade. European Commission President Ursula von der Leyen warned, "The European Union will take necessary steps to protect our businesses and consumers." Hildegard Müller, head of Germany's VDA, echoed concerns, stating, "This decision will hurt consumers and economic growth, especially in North America." German Economy Minister Robert Habeck also called for diplomacy, warning, "Tariffs ultimately harm both the US and the EU, and even global trade." Meanwhile, China's state-backed EV giants like BYD and NIO continue expanding, benefiting from government subsidies. With nations tightening trade barriers, Tesla and the EV industry face an uncertain future in a divided market. The backlash against Tesla has escalated beyond politics. Public outrage is now taking physical form. In Ontario, over 80 Tesla vehicles were vandalized overnight, while in Montreal, protesters defaced a Tesla dealership and staged a sit-in. At the center of this backlash is Elon Musk's close ties to Donald Trump and Tesla's perceived exploitation of Canada's EV incentives. On the other hand, Canada frames this as an economic safeguard, ensuring subsidies benefit domestic manufacturers instead of a US-based giant. So, what's next for Tesla? Legal battle? Tesla could challenge Canada's decision under international trade laws, but Ottawa appears firm on its stance. Strategic shift? Tesla may revise its North American production and sales strategy, possibly relocating supply chains to regain favor. With rising competition from China and Europe, Tesla might slash prices to compete, though this could erode profits. The Tesla Canada crisis is a turning point, not just for Tesla, but for the global EV industry. Protectionist policies, trade wars, and Musk's political stance will all shape Tesla's fate. So, what do you think? Is Tesla's golden era coming to an end, or will Musk find a way to turn things around? Let us know in the comments.